Hello, and welcome to this class on the Federal Reserve's balance sheet. The Federal Reserve System is the central bank of the United States. Like any financial institution, the Fed has a balance sheet. Like any balance sheet, there will be assets and there will be liabilities. What's different is that the Fed uses its balance sheet to achieve its monetary policy goals. For example, when the Fed decides to buy assets and expand its balance sheets, it is a monetary policy action. We will take a close look at the Federal Reserve balance sheet. We will look at its size. We will examine its components. What are the main assets? How are these assets funded? Then we will see how the composition of the Fed's balance sheet has changed in the recent years. We will see how dramatic monetary policy actions in response to crisis have led to these dramatic changes. This will be an important theme of this class. Let's get started. Every week, the Federal Reserve publishes a detailed balance sheet. This information is made available online and market participants pay close attention. Let's start by looking at the size of the Federal Reserve balance sheet over time. By size, I mean the total assets of the Federal Reserve. As you can see, in the early 2000s, the Federal Reserve held assets worth about $800 billion. With the 2008 financial crisis, the balance sheet more than doubled. At this time, the Federal Reserve conducted some major monetary policy interventions. We will discuss these interventions in another class, but you can see right away that they had a dramatic effect. By 2009, the Federal Reserve held assets worth a little over $2 trillion. From 2009 to 2014, the balance sheet more than doubled again to over $4 trillion. Finally, during the COVID-19 pandemic, the balance sheet size doubled yet again and reached $8 trillion by the summer of 2021. What is the key takeaway here? There has been an explosive growth in the Federal Reserve balance sheets since 2008, and this growth reflects monetary policy actions. Now, let's look at a breakdown of the most important assets. We will start with a pre-2008 balance sheet. This will tell us something about the Fed's operation in normal times. On Wednesday, January 12, 2000, the Federal Reserve held assets worth about $630 billion. By far the largest asset position, accounting for 3/4 of all assets, is government securities worth $485 billion. The second largest positions are repo transactions. This is when the Federal Reserve make cash loans on a short-term basis. This is usually part of an open market operation, which we will discuss in another class. The Federal Reserve also holds currency, which includes coin and paper currency and gold. Now, let's look at the liability side of the balance sheet. Here, the largest position is currency in circulation. That is, the dollar notes and coins in your pocket worth $590 billion. Then, there are reserve balances of banks with the Federal Reserve. These include both required and excess reserves. Remember, these first two liabilities, currency plus reserves, are together called the monetary base. The monetary base is a liability of the Fed. It is issued by the Fed and backed by assets of the Federal Reserve System. The Treasury General Account is the checking account of the US government. All US government payments are made from this account. Tax receipts are also deposited in this account. The balance sheet on January 12, 2000 was small compared to 20 years later. Indeed, in the early 2000s, it was not even a tenth of the size of the balance sheet during the COVID-19 pandemic. How did this expansion of the balance sheet happen? Let's examine the asset side first. This is the data for January 7th, 2021. There are a couple of things to note for the 2021 data. First, the amount of assets held by the Federal Reserve was much bigger. The total across all assets is 7.3 trillion. Remember, it was only 630 billion before. Second, the list of items has changed too. Now we see mortgage-backed securities and crisis facilities showing up. The largest item is still US Treasury securities, worth over 4.6 trillion. In addition, the Federal Reserve held mortgage-backed securities, that is, bonds backed by mortgages from government-sponsored enterprises, worth over 2 trillion. These bonds are guaranteed by the US government. So government securities accounted for over 90% of the balance sheet. Capital gains are next. These are profits on securities that have not been sold yet. These are also called unrealized capital gains. Then we see crisis facilities. These are various loan programs. They are mostly to banks, and funds were provided during times of market-wide stress. Banks will have to repay these loans. What is the main driver for asset growth? Clearly, it is the government and government-backed securities held by the Federal Reserve. How did the Federal Reserve finance this massive balance sheet expansion? A regular business or household might have to borrow to expand. However, the Fed controls the money supply, so it could do this instead. Did the Federal Reserve print more paper money? Let's look at total currency in circulation over the same period of time. As you can see, currency in circulation has increased a lot. Over the span of 20 years, it almost quadrupled. However, this increase isn't the whole story. If the Federal Reserve did not print paper currency, what did they do instead? The Federal Reserve does not buy government securities from the US Treasury directly, but purchases them from banks. How did the Fed pay these banks? Not with paper currency. Instead, they are paid with digital money. This takes the form of a credit to the bank's reserve accounts at the Fed. The Fed increased the amount of banks' reserves in the system. As you can see, bank reserves at the Federal Reserve expanded to about 40% of liabilities by 2021. What's missing here? Most of the remaining liabilities belong to the US government general account, about 20% at its peak. Why? Well, the US government had a bigger footprint after 2008 and especially in 2020. This resulted in more money being deposited at the Federal Reserve. The government used these deposits to pay for various fiscal programs. Let's wrap up. In this lecture, we have discussed the Federal Reserve's balance sheets and its components. The key takeaways are: first, the main asset held by the Federal Reserve is government securities. Second, the main liability is the monetary base. This consists of currency in circulation and bank reserves. Third, the size of the balance sheet went up by a factor of 10 between 2008 and 2020. At this time, the Fed used its monetary policy tools to support the economy. It paid for this support by increasing the monetary base, particularly the amount of bank reserves in the financial system.